Good morning, good morning, good morning, everybody. Thank God it is Friday. We made it again until the end of the week. We write 18th of October 2024, and we have loads to talk about again today. Unfortunately, our friend and normal host Ryan isn't with us today. He's feeling under the weather. Unfortunately, COVID still strikes left, right, and center. I was myself being under the under the weather a couple of months ago for a week, and now it's his turn again, it seems, and his family. So we wish him all the best and a good recovery. Um, First of all, do take advantage, if you haven't yet, of our October promotion, which gives you 20% off the trader funding program assessment if you want to join. How it works is you can apply for several different accounts, and depending on the size of your account, you will also get an introductory meeting with Blake Morrow, the CEO of ForexAnalytix, and also, as you can see here, you can enjoy free access to our ForexAnalytix platform and to our trading community, our chat rooms, which are amongst the most active and the best in this planet of foreign exchange and other markets. We do have our foreign exchange room, our Flownomics room. We have the trade room where people update their live positions. We have a news and research room. We even have a Spanish room as well, dedicated to all our Hispanic people around. So don't let this opportunity go if you want to not only trade our money, ForexAnalytix, and the trader funding program money, but also gain access for the time of your assessment and different times to get into our chat room. There's a lot of like-minded traders like you, me, who are in there, and we are only there to help each other. What is still running as well is our coaching program. You can get, as you can see here, 40% discount on your first session and then additional discounts if you take several sessions. Lots of people are taking advantage of this, at least to talk to us about their issues that they may find trading. And we have coaches on every level and in every spectrum of the markets. We do have a lot of technical analysis coaches, different coaches as well. We do have harmonics coaching. We do have pure technical analysis coaching. We do have Elliott wave surfers as well, and we do have like me, for instance, more fundamental approach and the trading psychology, the psychology of trading approach. So take advantage of those discounts. They are still going live. They may not last forever. And we'll see you all there soon. Right, without further delay, let's get into what happened. And I'm going to today perhaps to mix it up a little because there's been so much going on in such a short period of time that we need to talk about several things here. So I'm going to take it in chronological order this time and straight away kick off with the ECB. So the ECB, as widely expected, we thought that there may be some percentage chance that they go for a big one, but they decided to do the 25 BPs cut. Lagarde still being data dependent, still cautioning against wage or services inflation as well. But the main theme on the of the meeting was that, and she said something quite funny at the time, but then it does show us that they are willing to continue to cut, in my opinion, and they're saying they're not there yet, but they are in the process of breaking inflation's neck. And she also added that all data, everything, she said, literally everything is slowing right now. So we are still firmly on a cutting path. That being said, throughout the meeting. She did not give any hint. She did not completely fight against the expectations of potentially 50 BPs cuts coming. It is. Oh, it seems that my microphone is not working. Guys, do you hear me? Just checking if you guys can hear me. Yeah, okay, sorry. I just had a message that my to check my sound and my microphone. Sorry, guys. So yes, throughout the meeting, it kind of filtered through that she at least would not like to have to cut 50 BPs. So the market took a while to understand that. But it does seem to me at least that we are in for a series, a continued series of 25 BPs cuts, but there would have to be a bigger accident, for instance, in the two major economies, which are Germany and France. Of cutting the 50 BPs. Yeah, there we go. Something is wrong with my guys. Something seems wrong with my microphone, so give me just 1 second. It all seems okay. I don't know why I'm cutting up. I'm sorry, guys. So that for the ECB, and we just had. Usually we get those sources out around the London fixing time, but they woke up late. It seems that they had a good night in Ljubljana yesterday. So we just had some ECB sources out a few minutes ago saying that some of the ECB governors at this week's meeting wanted to drop the pledge to keep monetary policy tight. And that's an interesting one because they rather wanted to discuss the the slowness and the lackluster economic growth pan-Europe in favor of inflation. So some of those governors, sorry, are already thinking that inflation has been beaten and that we will be trading at or even below 2%. And we saw actually yesterday or the day before France's CPI coming down well under 2%. So that's for the ECB. We had a bit of a reaction, not an overly big reaction, because mainly the cut, the 25 BPs cut was already well discussed, and the euro was already trading lower before the ECB even made a decision. So we had a very limited impact. We're turning around a small interesting level here, which I will show on the euro dollar in a bit. But it does remain heavy for now on rallies. We're going to need to break high 108s and even 109 to get back higher, because as well at in between the and then we're moving on here in the calendar, in between the ECB statement and Lagarde's press conference, we had a few economic data out of the US, which were not too bad. Okay, we had a clear beat on the retail sales. I know inflation is not inflation adjusted, but the market trades face values most of the time in those numbers. We did have where we could have expected a little bit of a further uptick in the jobless claims. We did have an as expected number, so not going up due to hurricanes and other weather events in the United States. The number remained relatively stable, back below the 250K. We had a pretty decent Philly Fed index. Employment came down a little bit. That was the only negative number. And the rest, like prices paid, still pretty lofty. New orders were pretty good, and the capex was still at a very decent level as well. So all of that brought the index up a bit higher than what the market was expecting. Then it is manufacturing. It is not the services in indices. So take it with a small pinch of salt. This is not like the global US economy. It's just a minor or let's say smaller than services part of the economy. But the numbers were not too bad. A bit later, though, and that was still coming out during Lagarde's press conference, we had the industrial production for September, which printed a negative number, though, okay? And we had a revision lower as well. So give and take those two numbers, I'd say 1-1 ball in the middle again, and we kick off for the next set of play on those US data, okay? Crude oil, a bit of I actually didn't check what the API numbers were the day or a couple of days before. Didn't really affect oils in any way. We are trading Middle East still, right? And geopolitics in everything that is oil. And as we were discussing as well, and I'll show that if you guys perhaps can remind me, I'll show the oil a bit later because the longer term picture is still is very interesting actually, in my opinion. We had the ticks, and usually the ticks, and they didn't move anything yesterday, but we have to know that we are at historic high levels in dollar inflows, okay, in the United States. So foreign inflows in the dollar are still running at very healthy, lofty levels, I should say. Now that we are talking on this on those oils, let's quickly move over to the Middle East and what happened there. We knew and we've heard the elimination of the Hamas leader Sinwar, and there are still today meetings expected between Netanyahu, his chiefs of staff, including foreign and war and ministers and stuff. And it does seem that he said that they are not done yet. Okay, so. I think if we take that, that is one of the reasons why we also saw gold rally again, and the gold rallying as well brings me then over to what happened in China. And China had a bit of a chapter overnight because we didn't only have the numbers coming out there. So the GDP underwhelmed, okay, although we could argue that a 4.6 growth is most of the countries on this globe would take a 4.6% growth anytime. I would actually not qualify this as too bad if you take the official numbers for granted, of course. We also saw where is it? The IP here, which came out a bit better as well as expected. And we saw the retail sales, which weren't doing too bad either, together with the employment rate. So I would qualify those numbers as not too bad. And as a matter of fact, we saw, because of that and other factors, we saw the stock markets rally as well, because we had like a lot of officials speaking as well. But we can see that overall, and I will give you this extra reason for why gold is supported is because the PBOC and China are really now throwing at their economy whatever they can get their hands on. And especially we had the PBOC coming out saying that they urging a swift implementation of all the financial stimulus policies to the banks, and the banks are cutting rates, and they actually cut their deposit rates overnight as well. So that's, on the one hand, they do making a lot of stimulus, because they also PBOC PAN also expects the LPR rate to be cut 0.2 to 0.25% on the 21st, and he said that they may also continue to lower the reserve requirement rates into year-end as well. But all of this mix, even though we had slightly better numbers and the stock markets rallying in China, the kind of this mix between throwing the kitchen sink and it's getting lesser on investments in interest rates in China, the uncertainty that there is still that China is going to succeed to revive the Chinese economy, I think is an additional factor why stuff like gold, for instance, is keeping a bit tone. So for the gold bugs among us, it's not yet time, I think, to start thinking about shorting gold. I will show obviously the levels. If Derej is here, he will be very interested about that, obviously. But I think people are always talking about the Middle East, but I also think that for as long as the market is not completely on board with the Chinese revival of the economy, that is going to be an additional factor that is keeping gold bid, okay, and defying the laws of gravity where the dollar is relatively bid elsewhere potentially. All right, then we had the Japanese CPI out. Okay, it's coming down, and the people are already thinking that next week Tokyo CPI, which is obviously the biggest portion of the overall Japanese CPI, will undershoot. Okay, but the number printed still above 2%. So I would say like everything is not lost there right now. This being said, the market took it as okay. This is coming down now, and the dollar yen it's a bit below now, but since yesterday evening and then overnight traded above 150 until the Japanese officials came out, and that was somewhere what I was monitoring concerning this level of 115 dollar yen. Are they going to get vocal, yes or no? When we hit 150 straight away, and I think we've got the answer there. The answer is clearly yes. First of all, we had Mimura out saying that, what did he say? The moves are somewhat rapid and one-sided. Then we had the Deputy Chief Cabinet Secretary come out saying that they are watching the market with a sense of urgency, okay, and that they are monitoring for speculative moves. And then later this morning, we had Uchida reading Ueda comments. Ueda is in, I think, is he in Korea or somewhere? They're having meetings today and over the weekend. So Uchida read out a statement by Ueda saying that, amongst other things, the economy is growing, although some weak patches remain. The impact of the FX volatility on inflation has increased. Those are lines that they already said before. So they must be vigilant on FX move. And Uchida added that they are also watching at the BOJ and watching the market moves and FX moves with a high sense of urgency. So that should put the market now on its toes for everything yen concerned. We do see the market still relatively on the offered side of the yen, but I think we should be now a little careful. Perhaps they may not wait until we hit those prior high levels for sure, but not even the big 152 before at least upping the rhetoric against this move. It does seem that they don't want the market to let derail whatever they have tried to achieve up to now. So we need to start to be a little more vigilant. Okay, not that the market is going to start heavily selling all yen things, buying yen right now, because if they don't intervene, there's little reason right now to really go out and sell yen, because we are about a week away. No, a week? Did I say a week? I think it's 2 weeks. A small 2 weeks away from the next Bank of Japan meeting. I think it's on the 31st. Let me quickly check. Yeah, it's on the 31st. So but it comes straight on the back of those Japanese elections, right? And I'm a little reluctant to think in thinking that the Bank of Japan may hike rates this time. Okay, although FX may force them to cut or to hike. Why am I always saying cutting? May force them to hike if they continue to if the market continues to sell the yen. Okay, Last little line was, and we're expecting those Japanese unions to start to come out with their demands for next year wage hikes, and they came out. The Rengo came out saying that they are going to push for 5 or even more than 5% hikes once more this year. Where analysts and specialists are saying that it's going to be difficult to print 5+% wage hikes 2 years in a row. But at least they came out and saying that they want to have an equal pay rise for their workers than what they had this year. Moving on. The proud pound is standing up, and it has responded to the better retail sales. Yesterday already, the sterling was already on a relatively better footing, not specifically versus the dollar, but on the crosser side. And today it got an additional boost on those retail sales here. Those are better numbers than what the market was expecting, okay? We were still expecting some potential September downturn on the month-on-month. Instead of that, we had positive numbers, okay? We had like small negative revisions from the prior month, but we have better numbers here. So in the event of what may happen on the budget at the end of the month, the UK numbers are still, if you look at purely the continent here, is still outperforming its European counterpart by some distance. If you look at all the data combined, and as you say, Bran, it may further weigh on the euro sterling. Okay, I agree with that. And although I thought sterling would be more in a consolidation mode, even perhaps a bit on the defensive going into the budget, with potential tax hikes and so forth coming. But it does seem that the market perhaps was already a bit short sterling and forced out. But this euro sterling testifies to me that sterling still hasn't lost its appeal, at least not against euro and some other currencies, as we can see a little bit further down when I will show the charts. What is next? Oh yeah, staying on the sterling there's a bit of a report out that the Bank of England is saying that they may suggest that the UK bankers' bonuses may be paid earlier. So the deferred rules and the clawback rules may be loosened somewhat, and relaxing those rules may have actually helped this morning when that article came out, may have helped the sterling as well a little bit, because we know that the Starmer's government is likely going to struggle to convince investors. But if you relax bonus rules for the big earners, well, bankers in this case, but for all big earners, that may appeal to investors on the other hand. So yeah, perhaps that has also supported the sterling for a little bit this morning. What's next for the rest of the day? Building permits coming out really moved unless we get like a big divergence in the number. So we are waiting for that to hit. Then we will have Bostic and Kashkari speaking. Okay, and Waller as well to close the week. I'm not sure what new they can bring to the table, but being a Friday, the algos can always react a little bit to what they are saying. Oh, and then the Atlanta Fed GDP now, which is revised now basically on a daily basis, it seems, because yesterday they already revised their number from 3.2 to 3.4%. I mean, I'm starting to think that they just play blind darts and they just stick a number on what they think. Okay, we saw that last year we had a bumper number as well in Q3, but revising 0.9% in weeks time is a bit rich for me on if you look at just 1 quarter numbers. So that is something that I would suggest market that we ignore for now. Okay, we ignore for now. We know that overall the U.S. economy is still not doing too badly, but I mean those numbers they can get revised from one week to the other, and next week they can come up with the numbers sub 3% again. All right, that's it for the comments and whatever happened before. So let's have a look at what's happening right now and what may happen next. So first of all, this gold is flying. It's really flying. And for as long as the Middle East sends enough uncertainty into the markets, this has very little scope to really come down, right? I say don't fight it. My next bigger level is somewhere around 2805, 2820. But we do have a few levels in between. Not that they have been taken into account too much. Those are just like extension levels, all right? And we must say that those extensions, when we print new highs, okay, those are pretty loose. We have to take them like really, really loose, just as a bit of a zone. Don't go and pin your strategy down to a level. Okay, we are just breaking up. Since we tried went a couple of times up and down this prior high, and then since last night here we broke and we haven't looked back. Middle East situation is still what it is. We still don't know exactly what's going to happen between Israel, the rest of Hezbollah, the rest of Iran as well. And as I also said, in addition, for as long as the investors don't buy the Chinese revival story, I think it's an additional push to what's happening in gold. Okay, yes, you can have violent swings as we've seen again in the Chinese markets. They moved up a lot. Xi also stressed that advancing modernization will be with tech playing an absolutely pivotal role. So all the tech stocks went flying in China. But we can see from, if you look at the Chinese yuan mainly, the external investors, they are not yet really on board with the Chinese revival yet. And I do think that it is a bit of an additional push for gold. PBOC is an official number. They seem to have paused their gold buyers, but we have been talking about other buyers in the market, other Asian buyers as well in the market, and I think some of the population even they probably are still buying gold as well, even at those levels, until we see a calm down in the Middle East situation and a Chinese revival. It's tough to counter trade this gold trend, right? Okay, silver is enjoying the ride as well, but not as much as gold is doing. Okay, I think we really need to break above those, and I would say 32 and a half. This spike is perhaps a bit violent and fast to have been undone, but I think 32 and a half. If 32 and a half goes, this is probably then pushing through into 33 and beyond. I've got like a pretty fat target in there in the longer term at 35. And as we have seen, any move down to low 30s will probably be bought again, and perhaps already a move now into the mid 131s will be lower 131s will be good enough to find some buyers, as we've seen here. Okay, euro dollar. Trying to stand up. I don't see too much of a reason now that the ECB is done. I don't see too much of a reason, barring the market probably being decent short now, euro, of a euro revival right now. We are back into this triangle. And there are a few levels here, okay? We went below the 61.8. That seems to be, because we just traded it again on those ECB sources, that seems to be the level above which it's going to be interesting, above or below which is going to be interesting to close the week. Is euro dollar on the whole line to go up again, Jacob. I don't think that we can say that euro dollar is on a line to go up again right now. But to me and other people, the technicals are kind of pointing at an M formation here as well, which could take us as low as 106.5. But before that, I think on the intraday, it's going to be 108.35-ish, above, below, can decide upon. And I would say 30, 50 points. And I'm not seeing huge moves in euro dollar right here. Although I think we will find a bit of resistance as we go up on the daily, as you see here, the 200-day moving average, 108.70-ish around. I think we are going to find already a bit of resistance, and then likely around the top end of the triangle, which is also the 50% of this move here, which is 108, 109.07 precisely. Call it 108.95, 109.10. If it get up there, I suppose we'd find sellers. I have the impression that before the whole story is over, we are going to have a little retest here to this 107.5, perhaps 107.30 or so. That is my impression right now. Okay. Sterling. Okay, sterling defying the laws of gravity again today. We saw this move lower. People getting out of sterling, and actually I think already getting short on 1 weaker data point, but then it stabilized. And cable is perhaps not your best of instruments to trade right now, unless you would be a deep buyer in the dollar or a rally seller on the cable, thinking that is just temporary. Then any move around 131 should be of interest to you. On the other side, I do think it's those numbers are strong enough to hold the 130 line today, if not the support here. But is coming in quite a bit lower, and that's the low 129s. I'm not sure that on this Friday we are going to get a 129, deep 129 print again. That's what I think. The interesting one here today on the sterling is euro sterling. So we had this shot up through that down sloping channel, but in the meantime we're already back in. It didn't really last very long, those breaks above. And today we tested the bottom line, and we are rebounding right now. Okay, we are rebounding right now. I guess some profit taking of people who are trading this. The data, as I said, are still in favor, I think, of the sterling versus the euro. So I would suspect that any short covering of take profit guys or girls would perhaps already stop in the 85 and a quarter around here. I haven't drawn it, but for sure I would say that this 50-60, if we get it at some point, we'll find some sellers, unless okay, there's more news about bad news about the budget. Okay, I think that's going to be the next really big thing happening, the budget, and that can of course change a lot for the sterling. But I think in the meantime, I wouldn't be surprised if we get rally sellers in the euro sterling, and we get a move back down to below 83, perhaps towards 82.80 in the short term. I think the longer term, yeah, I've got this 82.80 in there, and then if you look at the low that we have printed back in March 2022, that's around 82, the figure. Will it have the power to get down there? If it's a quick move, why not? But I think then before the budget, if ever we get there before the budget, that should be enough for this round, because we do have in interesting levels historically there as well. That for the sterling. What else? Aussie CAD. I haven't looked too much at Aussie CAD. Dimitris, let me see if I have it anywhere on any of my. I don't even have it. I'm a bit void of ideas in the CAD, my friend. Lately, as you can see, I don't even haven't even, unless I've got it on another ah, on another one. I did think no. You think it's good for a short? You think it's good for a short? Hmm. I don't know. I don't know. I don't know because well, I'm going to not say too much about this because if you look at the longer term, I'd say it's rather big. If I look at a picture like that without knowing what it is, we held some support here. This looks to me like wanting to trend a bit higher. Oh, okay. Perhaps on the really short term, we may argue that there's potentially levels. If you just look at this level and then perhaps put a fib on it against this prior high. Is that what you mean? Yeah, around 92, 60, 65. Could be, but if I look at it more medium term, this looks to me like a hold here on this trend line, and perhaps we are working on this channel upwards. I don't have too much confidence in the Canadian dollar, and on the other hand, okay, yeah, all right, shorter term. On the other hand, Aussie dollar Aussie has seen relatively decent data that are keeping the market back from expecting too swift rate cuts over there. And I tend to agree with it right now because if you look at stuff like, for instance, Aussie Kiwi, Aussie Yen is another one, but of course there's a lot of yen in there. But Mrs. Watanabe and friends, they always look to put their money to work. But Aussie Yen is another one that is trying to make a bit of a comeback. Um, I think the Aussie may be one that I'm not going to say hugely outperforms, but at least outperforms versus other selected currencies. And since I only have like very limited confidence in the Canadian dollar because of McClem also being relatively dovish, and somewhere oil's not really holding, I'd say I'm not tempted to go short Aussie cat. But of course, if you look at it in the short term, you can do those 50, 60, 70, 80 points lower and then move it back higher, okay? But I mean, it's just my overall feeling about one and the other currency separately, and then putting them into a pair, Dimitris. I promised you to have a look at oil. And yesterday we were looking at this, and it's a daily, okay? And then take away all those lines here, and well, let me just do it. Let me just take away all the lines. Just as well, I can leave those as an exercise. Just look at what's happening in the longer term. We had, of course, yeah, post-COVID, whatever. Then we had Russia, Ukraine, okay, revivals and stuff. Then we had OPEC trying to cut production and output, okay. Then we had this whole move lower. Then we had Israel, okay, the start of Israel and everything. We had more geopolitics. We had more geopolitics. We had more OPEC trying to cut their outputs. Although there's a few rogue ones in there who actually their output is higher than what their quota say that they should do. But there is also a demand issue here. Okay, so people who are talking about oil trying to get higher, every spike has been lower since the big, big, big spike, okay? Every single one of them, all right? So I promised to talk about oil. Whatever happens, right here and now, yes, the Middle East situation or even Russia, Ukraine could have an impact and put oil higher. from levels in the 60s. Okay, 60s, huge levels in up in the 60s. You can see them here as well, huge levels in the 60s. But if you look at what the economy tells you and what the actual price action in the longer run tells you, this is still not something that is lastingly going higher, in my opinion. This just tells me that it needs more to lastingly go higher. What is more? That brings me back to a Chinese revival. If that happens, then, and only then, I think we can start to say, okay, now we can potentially start to buy whatever energy there is in the world and start to buy things. But unless it happens, I cannot keep away from this picture and say, like, whatever happens, whether it's like $5-10 or so, it's going to it's going to be sold again. And if you look at then the picture, if you put the price on it, look what's happening if ever we start to go above 78, $80. Okay, this trend line is going to go down, but look at those prior tops. Okay, to have a clear longer term view that this is going to go higher, we will have to start breaking prior highs. There is no other condition that is going to put it higher. For as long as this continues, I'm really can't buy really oil. And it also tells you in a way that the market is still not buying the Chinese revival as well. And what is hampering the Chinese revival? Well, for the time being, they're putting a lot of focus on the domestic economy, as we have already been highlighting, but also the geopolitics, right? Xi is going to the BRICS meeting next week in Russia. He's not really going to help the geopolitics case either. Okay, and so I think we have to remain vigilant. If you want to buy dips, yeah, low 60s, why not give it a try? Because it held so often, and it's impressive levels down there. But for longer term trade, for it to go higher, it will have to break these levels, and the market will have to buy into Chinese, which is also going to be good for Europe, which is going to be good for a lot of stuff. Revival, okay, this is going to be one big revival trade. And of course, Middle East, if the situation calms down, it's probably first going to put in another leg lower as well. All right. So yeah, for the time being, I wanted to highlight this gold. This is still not a picture that tells me that we should be long of the stuff. Okay. Quickly, because I see time is advancing. Whoops, that's not what I wanted to do. Dollar yen. This is what I'm looking at. Potential going back to the massive, infamous 152 at some stage, and then perhaps forming a head and shoulders formation. It is possible with those the combination of yen being sold, because the JGBs are not really yields. The JGB yields are not really flying. Dollar yields are holding the 4 line and going up a little bit again. So it is possible that we get there. Couple of levels to keep in mind: the 150.80, 50% of the move lower, and then that huge still 152. So the market sells yen, yes. Can it go higher? That'll depend on the officials and probably the Bank of Japan. Reversal levels. First one, so that's now, because we have been back and forth through it. I think that's going to be a small one around 149.40. I would rather look at low 148s and then this 147, 2025 again. This is going to be the levels that can reverse the whole thing. Okay, but before that happens, look, we have seen in the whole move higher, we have seen those setback, one and again and again and again, and we are in one again right now. But what happens afterwards? You do the next leg higher. So 2 levels here: 150.80, 152 on the top side. 152, big importance, because it could be the shoulder, the right hand shoulder of the head and shoulders as well, not only being that massive level. Okay, And anything else, guys? I just wanted to show this one because it's again doing its trick that it did at 86.05, 05.10 dollar Swiss. I told you about the 78.6 right around 86.70. It's again doing the same thing, banging its head against it, banging its head against it. We need a break here, yeah, to go up in the 87s. Do I think it can happen? Yes, I think it can happen. Will it happen today? I don't know, but I do think. Still, overall, if I look at what and I'm repeating myself here, but I've started to be long. I started to be long around here when I saw FX data for September at the S&P. They were a bit higher than what I think just revals would have done. So I think the S&P did show up somewhere in those low levels. And that is it for me for today, people. Have a very fine end of week. Hopefully, Ryan recovers for next week and will be back with us. Safe trading on a Friday. If it doesn't happen today, it may happen next week, guys. So you don't need to push for everything, okay, today. Have a good weekend all, and we talk to each other next week. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.